There are two types of robotic dogs that exist in the world right now, and they could not be more different. One is absolutely terrifying. It's the robotic dog that Boston Dynamics created that people have attached machine guns to. And you know, I do feel oddly patriotic and American when I do see this. Stars and Stripes, man. They'll get you. And the second is Jenny, a sweet, sweet pup that helps people who suffer from dementia. So what is Jenny? Jenny is an extremely lifelike looking pup that helps perform precision surgeries and prescribe heavy narcotics. Okay, not really. That would be cool. But Jenny is basically a companion for people that have dementia. In many cases, the alternative would be a regimen of pills that could come with unwanted side effects. The company that created Jenny is currently raising funds to continue their mission to bring this product to market. I'm going to break down the bull and bear case for this startup and let you know if it's a good investment or not. But before I get into this, I want to take a second and just appreciate the fact that the US regulatory system allows everyday people to invest in startups. Many startups get their funding from venture capital firms, but not every type of startup fits into the VC algorithm for what makes a good investment. While VCs salivate over high-margin SaaS businesses, it's much more difficult for hardware and early-stage medical device companies to get funding. Without the equity crowdfunding ecosystem that's in place, there would not be as much funding for startups like this one that are trying to do good in the world and put out some really amazing products. So for that, I'm grateful that we have the option in this country to invest in startups. Now, it is time to present the bull case. I think I first need to dive in a little bit more as to why people would choose Jenny over a living dog. For starters, allergies. But more importantly, lots of people don't have the physical or mental capabilities to care for a dog. Jenny's main group of end users will be people that have dementia, and in the US that figure stands at 7 million people. In fact, CNN just came out with a headline this week that states that 1 in 10 people over the age of 65 have dementia in the US. Now, Jenny is a very expensive pup. Each one sells for $1,500. If we do some very rough math and assume that 5% of people in the US that have dementia would want this product, that would equate to $525 million in sales. And let me be clear, I don't think the goal of Jenny is to sell directly to the dementia patients. I think it's more geared towards those who care for people that have dementia. So family members, nursing homes, things like that. Now, 5% is a somewhat optimistic assumption, but to be honest, there's so many more people that would benefit from this type of product. While people with dementia is the initial focus for Jenny, it could also be applicable for people that have autism, anxiety, or experience loneliness. Jenny currently has over 2,500 pre-orders, which would generate the company nearly $4 million in revenue out of the starting gate. The company is also projecting 58% profit margins, which would yield over $900 per unit sold. Now, one other encouraging thing that I found about this particular startup is its management team. The founder previously sold his legal software company for $65 million. He then took the number 2 and number 3 at that company and brought them over to this one. So we have an entire management team that has worked together and has a proven track record of success. All right, so if we're summing up the bull case for this startup, we have a large addressable market, a high selling price, decent margins, and a management team that has a history of success. Now, is that enough to stand the test of the bear case? The bear case for any startup is that there is a lot of inherent risk for any startup. Let's dive in and stress test some of my fears. Number one is there actually might not be as much demand as we anticipate. 2,500 pre-orders sounds like a lot, but is it actually? Jenny and the company have been public facing since 2020, so the 2,500 pre-orders is cumulative over that 2 to 3 year period, and it comes out to less than 1,000 pre-orders per year. And Jenny has gotten a ton of free press along the way. They have millions of views on YouTube videos alone. So this isn't a matter of just getting the story out. And for all those views to boil down to just 2,500 pre-orders, it could be a little bit concerning. I ultimately think that it's really difficult to assess pre-orders as an indicator of demand. When a company isn't trying to actively sell its product and, put paid marketing behind it, it's difficult to tell. The second concern is around spend management. The company's been spending about $1 million each year in research and development, and this is a good chunk of change. Now, the goal is to reduce that once the product is in market and you've worked out the kinks, but you never know if that is actually going to decrease or not. I also see $138,000 attributed to marketing in the most recent year. I'm not sure what the company is spending marketing dollars on if they don't have a product that's available to market yet, so that is a little odd to me. Now, it could be the fact that they've run focus groups to get the product features right and see what consumers would actually want. So if they're categorizing that as marketing spend, I could see that. Number 3 is competition. Jenny is the top of the line when it comes to robotic companions, but there is cheaper alternatives. There's a brand called Joy for All that has a dumbed down version of the product that is selling on Amazon for just $140, less than a tenth of the price of Jenny. Now, this is actually a huge concern for me. I know that Jenny is a far superior product, but are consumers going to see the value in that enough to pay 10x the price of the competitor? I don't know. So to sum up the bear case, we have risks around demand actually materializing, spend management, and competition from cheaper alternatives. All right, let's put this startup on the scale and get the crowd scale weighting. Let's first start with business model. 58% profit margins on hardware is pretty good. They've also mentioned adding in a subscription model in following iterations. If they can register Jenny as a medical device, then insurance kicks in, and I think it makes the $1,500 price tag a lot more manageable. 7 out of 10. Opportunity for scale. They're starting with people that have dementia, but the application spans so much further. I'm giving this an 8.5 out of 10. Competition and risks. My biggest concern is they're going to cede too much market share to the $140 competitor. I'm going to give this a 2.5 out of 10. Founder strength. The founder's done it before and he's ported over his entire management team. This is also personal for him. His mother suffers from dementia, so I really think he's going to give it his all and make sure that this is the best it can be. We're going with a strong 9 out of 10. Exit potential. This one's a little bit tricky because I'm not sure exactly who would acquire this type of company, and I'm not sure it makes sense for them to go public. My best guess would probably be acquisition by some sort of consumer tech, but because it's a little bit murky, I'm going to give them a 3.5 out of 10. Add those scores up, multiply it by 2, and we get a grand score of 61 out of 100. This would put Jenny in positive territory, and I think I might invest in this one. It's a great mission, and any financial returns would just be a cherry on top. Plus, someone's got to defend us against these maniac robotic armed dogs. Hey, by the way, one more thing. I've got an email list of close friends that I send startup investing content to. If you want to be part of that crew, I'll link it in the description below. Thanks for watching. Peace, y'all.